So welcome to Chapter 1 of your FA course, Financial Reporting and the Financial Statements. In this first part of this first video, I'm going to focus in on business entities. And in the second part, we'll deal with financial reporting and indeed statements. This first chapter is important for us just to get to feel for really the whole course. I mean, everything within this chapter is going to be referenced in various parts of the chapters and videos that we run through as we get towards the end. So let's take a look at this first area, and what we're going to focus in on here is really the idea that business entities come in a number of different forms. And let's say that you were deciding to set up a business, you would have several options. Let's look at the first area of sort of why businesses exist. I mean, obviously, for most businesses, indeed most businesses that will feature within this particular area or section of the course, there will be what's known as for profit. So businesses exist to make a profit. They may sell goods, they may sell services. Now, obviously, there are other types of businesses too, or entities, if you will. For example, not for profit. So think of something like a charity or an NGO, a non-governmental organization. But in the main, for our purposes here, we're focusing on businesses that exist to make a profit in some way, shape, or form. But businesses can be different in a number of different ways, and we'll see reference to the different, what you would call mediums. You know, for example, a sole trader, a partnership, or a limited company. So in terms of their sort of financing or size or legal position, they can certainly vary. So the main examples that we're going to see within this particular section are sole traders, partnerships, or limited liability companies. Now, we'll go into detail on these, and broadly speaking, if we go from the bottom to the top, I would suggest to you that sole traders are very simple, very straightforward, very easy to set up, and generally centered around one person. Partnerships involve several people, also quite straightforward. In essence, partnerships are really a sort of a set of sole traders. And then we would move on to limited liability companies, a little bit more complex, governed by Companies Act, more administration, more cost, etc. So, moving from there, let's drill down into sole traderships. Now, as just mentioned, this is really the simplest form of trade. I mean, any business can be set up as a sole tradership very, very easily, really in any tax jurisdiction, in any country. It would take probably no more than a day or two to really register a sole tradership business, to set up a bank account, etc. And then really you're ready to trade. And the key point here is that sole traders are one person. They trade in business alone. Either a person perhaps operating a shop, a person operating a consultancy service, etc., etc. So the sole traderships are about as straightforward as you can get. Now, in terms of the legal differences, now note that we're comparing sole traderships to partnerships and indeed limited liability companies in this particular video. Let's look firstly at the change in business ownership. So, for example, if you were operating a sole tradership and the business ownership were to change, how would you do that? The only way to do that is to sell on to perhaps a new owner, perhaps another sole trader, perhaps a limited company, perhaps a partnership. But in essence, the business is the person. If you want to change the ownership, you change the owner themselves. Moving from that, in terms of continuation, if we sell a business as a sole trader to another person, the existing business ceases and the new business commences. Note the difference between that, let's say, and a limited liability partnership, where ownership is based on a shareholding. So just because a shareholder will sell their shares doesn't mean that the business does not continue. It certainly does. Outside of that, we look at taxation. Now, sole traders are really taxed in their own right, individually, based on the profits of the business. And I mean, technically, the owner themselves isn't taxed, it's the business that's being taxed. Next area for us is the area of business property. If I operate as a sole trader, then really there is no separation between me and indeed the business property that the sole tradership owns. Absolutely none. Really, the business is the sole trader. The property is owned by the business. Therefore, the property is owned by the sole tradership itself. Moving from there, final key point here is legal action. And this is really key to the existence of a sole tradership business, because really the buck stops with the individual. So there is no separation between actions of the individual and indeed actions of the business. So for example, if there is a dispute, some sort of legal issue, the individual concerned, the sole trader, is liable for all the debts, penalties, fines, etc. in any way, shape or form. That creates a little bit of an issue for sole traderships and is completely unlike, let's say, again, a limited company, where there is a separation between the business and the actions of the business, for example, the directors, and indeed the ownership of the business, which would be the shareholders. Our next section really concerns advantages. So let's just say that you were to decide to set up a sole tradership. What would be the main advantages to you of doing so? Well, we've touched on a few of them already. The first thing is really quite important. I think it's control. One of the issues of being in business, certainly in my experience, is the involvement of other people. If you're running a business as a sole trader, then you decide on every course of action. You decide on what products you sell, services you offer, and indeed, at the end of the day, your advantage is that you take the profits. In other words, you do not have to split the profits. So sole traderships have complete control over what they do and indeed the success of the business. Outside of that, formalities, as mentioned up top, it's very, very straightforward to set up a sole tradership business. It's very, very straightforward to operate it. Within a day or two, you can be operating in business. There's no Companies Act, there's no companies legislation. You don't even have to publish your accounts, unlike, let's say, a limited liability company. So very, very simple. Final key point is really flexibility, and indeed, you can work as many hours as you want. You can work as few hours as you want. You're not beholden to any particular, let's say, partnership agreement or shareholder agreement, etc. Really, sole traderships offer complete and indeed wide flexibility in every way. Now, the flip side, again, we've touched on these points up top. The flip side really is the buck stops with the sole trader. An individual sole trader is fully liable for all the business debts. So if a sole trader makes a poor decision, a wrong decision, then the liability rests with that individual. And indeed, in saying that, that individual's personal possessions are up for grabs to allow for any business decision or any incorrect business decision that the individual has made. That could be their home, car, etc., etc. So liability is a key issue. Second area is finance. Now, according to the portal in this particular section, it says that may not be able to raise finance. That's true. It's more difficult. It depends on the assets available to the sole trader. So for example, if the sole trader can provide security for a loan, let's say a bank loan, then they will be able to raise assets. But I would agree that it's a little bit more difficult for individuals to raise finance than, say, a limited liability or a set of individuals, i.e. a partnership. Third and final point is sort of a continuity. Really, the business rests with the sole trader. If they cannot work, if they die, if they retire, then in essence, the business ceases. That's unlike, as we said up top, a limited liability company or even a partnership that has a number of partnerships. The business will continue, let's say, if one partner leaves, or perhaps with a limited company, if a shareholder passes away, the business will still continue. So that's an issue for this sole tradership medium. Now, partnerships, as I mentioned up top, in one sense, partnerships are really a set of sole traders, but they are bound by what you would refer to as a partnership agreement. So in essence, we're talking about two or more people owning and indeed running a business together to make profits. As mentioned, generally speaking, a partnership agreement would underpin the arrangements between those two or more people. And a partnership agreement is essentially just a contract which sets out the terms on which the partnership would operate. Now, in terms of legal differences, several here. The first thing is the change in business ownership. The partnership agreement will sort of lay out the parameters where partnerships are either joining or indeed leaving. Generally speaking, when you have a partner entering a partnership, they will enter through some form of investment. So, the business ownership can change every year. It could change every 6 months. We could have partnership leaving or indeed coming in. Next area for us is continuity. Certainly, partnerships change from time to time. Think of an accountancy partnership that could have 5, 10, 50 partners. And in essence, if a partnership leaves, then a new agreement would need to allow for the remaining partners or indeed a new incoming partner to continue the partnership. Next area is taxation. As mentioned up top, generally speaking, partnerships are taxed on the profits, but what you'll find invariably in most jurisdictions is those partnership profits are directed through to each individual. In other words, at the end of the day, yes, the partnership is taxed, but the partnership taxation is split on a sort of a sole tradership basis. So you'll find that individual partners are taxed in a very, very similar way to sole traders. Okay. Next area for us is ownership of business property. Again, very much like sole traders, there's no separation. The business owns a property, and indeed there's no separation between the ownership of that property and indeed the partners themselves. They will have a split share. Last area for us is really legal action, and there's a key phrase here: joint and several liability. So what that means, although it's not referenced on screen, is that the partners are certainly legally liable for the actions of the partnership. And when I say joint and several, let's just say that if a partner is unwell or a partner dies, at the end of the day, each of the partners are fully liable for the actions of all partners. That's what joint and several means. So in one sense, one should be very, very careful about choosing partners to go into business with, because if other partners make poor decisions, the remaining partners are liable for those decisions. There's no separation in any way just because another partner did the action. Okay? Now let's look at the area of advantages. I mean, obviously operating in business with other people can bring in new skills, new expertise, etc. Over and above that, in terms of defined roles, it may well be that each partner brings in a different level of expertise in some way. So really having more than one person, a la a sole trader, can give you advantages. Okay. Outside of that, in terms of the finance, certainly having more than one person gives the opportunity to put assets down or securities or guarantees. So it may well be, and it invariably is, that raising finance for a partnership is a little bit easier, particularly where you have a new partner coming in, because invariably new partners will be required to bring in new investment. Last area for us is really paperwork. Certainly, like sole traders, partnerships do not have to file accounts publicly. You can't search, let's say, on Google or at Companies House for financial statements relating to partnerships, but certainly they are required to keep proper accounting records and indeed to file accounts and returns annually, like a sole trader would, with various tax jurisdictions depending upon the country. So probably a little bit more paperwork, but certainly not as much as we'll see with limited companies. Disadvantages, certainly working with other people can be a disadvantage, but I think the first key point is the idea that at the outset, let's say unlike a sole trader, you will require a bulletproof and indeed comprehensive partnership agreement that sets out how the partnership will run. Now, it says that this will cost money and it may be expensive, not overly expensive. You could probably draw up a partnership agreement, a fairly standard agreement, for €500 or thereabouts. It depends on the number of partners, but there is a little bit more administration and costs associated, let's say, with running a partnership as opposed to running a sole tradership. In terms of decision making, obviously where there are more than one person involved, the time taken to make decisions will slow down. So that to some extent can affect the progression or indeed the development of the business. But as we said, on the flip side, maybe 2 heads or 5 heads are better than one. Last area for us is really profit sharing. Unlike with sole traders, where the buck stops with the sole trader, if the business is a sole tradership and it's very, very successful, the profits are geared towards one person. In this particular case, obviously, profits are being shared and indeed losses are being shared. So that creates a little bit of an issue, particularly if you have differing levels of input or perhaps expertise or experience between different partners.